Okay, here we are again. I'm Brian Knight from Melbourne in Australia, and this is.
And I'm Ann Armitage from Ontario, Canada.
And welcome to us giving you an overview of the forex market and how it operates. It's about patterns. It's not a random thing. It has all these things that work and can work in our favour. So let me just share.
So let's have a look at a chart and we can explain a little bit about, say, what a trend is and how that looks.
Okay, all right. Now, to the untrained eye, if you've never seen a forex chart, it may look complicated. Let me just get rid of that bit.
Tends to look pretty intimidating to a new person overall, I think. I remember myself when I started, I thought, oh my goodness, what on earth is this that I'm looking at? All these little lines that are going all over the place and I have no idea what it's supposed to be telling me.
Yeah, well, there's different colors too. There are green ones, and if you look at it, the pattern is green ones go up and red ones go down.
Mm-hmm.
Wow. Straight away you can see what's going on. That
Yep.
goes up, that goes down, that goes up, that goes down. And I can just draw a little trend line. So if I draw a line from here up to there, you can see that's an upward. If I draw another trend line from there to there, you can see that's going downward. I can do another one that goes from there and it goes up there.
Mm-hmm.
Draw another one and it goes from there down to there. Another one from here to there. And then we go another one from here down to there. Oh my gosh, there's lines all over the joint. Then we've got one from there up to there. Now that looks a bit messy.
It does. It does. And I mean, overall, you probably wouldn't want to necessarily have quite that many, but
no.
We're trying to show that there is always a pattern that occurs in the market. It will always go up. It will always come down. Go up, go down, go up, go down.
Yeah.
And that is what we refer to as a trend.
Yeah, a trend. Yeah, trends. That's right. And it's just when it goes up, it's a buying trend, and when it goes down, it's a selling trend, and it's one currency pair against the other. And it's really simple to understand. If any of you have ever gone on holidays to another country, and you need to buy the currency of that other country, there's a price difference, and then there's a fee in it. A cost to make that change. And then when you come back from holidays and you want to change some of the money back again, you're going to have another change and another fee in it. That's all the market is. It's just $5.3 trillion sloshing around with fees and bits and pieces going all over the joint.
But don't forget, Brian, sometimes when you come back from vacation and you change your money back, although you are going to be charged fees again by the bank, sometimes you will end up actually with a little more money than you started with, or you could end up with less, depending on what the value of the currency is at that time.
Yeah.
And again, that is how the market works.
Yeah. And you've got a situation where it goes up into a buy, it goes, that's your poochie. Goes up into a buy and it goes down into a sell. But you've got to remember also too, the market only ever goes to the right. It never goes backwards. It only ever is going into the future. That's the past here on the left. The future is here on the right. So where this little blue line is actually where the price of that currency pair to each other actually is sitting right now, right at this moment. But before it was up here, and before it was up there, and before it was down there, and before it was up there, and before, and this is where it comes into a thing that we call support and resistance. And now you don't have to worry about what it means. It just is sort of like, well, it's interesting that if I put a line here, it's interesting that it came down and went to that line a bit and then went up, and then it came back to that line and went back up, and it came down near that. It didn't come all the way down, but it went up, and then it came back down to that line and jiggled along a bit, went down, and now it's come back up near that line again.
Yep. The way that I initially started to think about support and resistance was I thought about support being a floor and resistance being the ceiling.
Yeah, up there. So that's sort of the resistance up there. So it sort of bounced around in between, even though it went down a bit. It's come back up again. I mean, the adage we talk about in trading is, what goes up comes down. What goes down comes back up. And they have an average. It's called you have a 50-day average or a monthly average or whatever. There's all of these averages. And you've got to remember that there's a whole lot of psychology behind it and people making trades in banks and all other things that make this trend do what it does across this page. And you might say, oh my gosh, this is a lot to remember and a lot to have to do to be able to collect my 3 pips a day or 10%, 3% a day. Yeah, 10 pips or 3% a day or 10% per month. It's on a daily basis. So, and once you've learned the basic skills, you really don't have to get that complicated. It's not that
You really
difficult.
don't. You really don't. I mean, at the end of the day, you learn that there's lots of different ways that you can look at a chart and that you can learn to analyze things. Some will employ certain tools, some will employ other tools. But in the end, it's a personal preference thing in terms of which ones you decide to employ.
Yeah, and I think it comes for me and for us, we understand it's got to suit a person's lifestyle. So you don't want to be getting ready for retirement or retiring or be in retirement and having to spend all your time looking at this or having trades or whatever. No. They're called strategies, and there are lots and lots of different strategies. Some mean that people have to sit there monitoring it every minute. I don't want to do that. I look at my charts in the morning when I get up and have a bit of breakfast and do stuff, and then I'll look at them at the end of the day, and I'll have trades that will be running through the day or through the week. And I can still go and see grandkids. I can still go to the shops. I can still do all the things I need to do, even on holidays, because I can basically, most of it, I just look at it on my phone. And if you've got a smartphone, it's pretty easy.
It becomes really portable.
Yeah. So I can put trades on and I can look at this stuff just on my phone while I'm having a little relax even.
And let's not also forget, Brian, that there's also so many wonderful tools that we can offer that will make things a whole lot easier. So if it is your personal preference in your home anyways, and you don't mind sitting there and playing with the charts and looking at things, then there's lots of other strategies that you can use as well.
Yeah, absolutely. Absolutely. All right. Now, what else? I think that's pretty well the basic. There's support.
We've got our support and resistance. We've shown a trend line and so on. So I think, yes,
and that the market only moves across to the right, and when it goes
and
up,
we learn from the history going to the left as well.
Yeah, we can see what it's done before. Yeah. Okay.
And that teaches us.
All right. I think that's really the basics, and I don't think it needs to get a lot more complicated than that. I mean, we have a lot more knowledge, yet you always seem to come back to the basics to understand how you're going to collect. And so people might say, well, how do I make my 3 pips? Well, we'll explain about what a pip is and the units of measurement of movement that that this makes. Let me just do one little quick thing. I can just grab a little ruler here, and we can go from there down to there, and it shows that that's around about 200 pips, roughly. Yeah. And then when it went down the bottom there and it turned and it came back up here, it's now moved up about 100 pips. So you're going to have to find out, or wait to find out, what a pip may be worth as your currency amount. So if you were to get 200 pips down and another 100 pips up, that might be worth an amount of money to you, or it will anyway.
Might be a life-changing amount of money to some people, yes.
Absolutely. And then if you compound that, as you might have already seen, that's going to be very influential in your life. All right, Anne, what have they got to do if they want to find out more, or just use the real basics to trade and understand how they can have a nest egg out of this trading Forex?
Well, I think what they want to do first of all is get back to whoever it is that pointed them in this direction, and they want to get started with iMarkets Live as quickly as is humanly possible.
Yeah, or if it's either myself or Anne that have, then get back to us and we can help
Absolutely.
you out to start the journey, and we can ease you into it really gradually as you might need to.
Yeah.
All right, I'll just come back to us. So yeah, and this is the thing, I'm trading in Melbourne, Australia, and Anne's in Canada. Like for me, it's my morning, but for you, Anne, it's your.
Oh gosh, it's evening. I've actually missed my supper time.
Whoops. All right then. Until next time, we'll see you. Get in contact. Bye.